Hope, yes. So, the reason behind is to understand why there was a gold base and why there is a gold source, etc. This is how the gold chart looked. So, this is a daily time frame. Okay. So, can you see the gold went from 2302 all the way to 5600. Okay. This is like day chart. Okay, so only this candle is still forming. It trade by 10 minutes. Every other candle is right. Consider right. Okay, so we can say there was an uptrend. Okay, to this point, and after this point, the 5600, and the price had a sharp fall. How much? About 1,000 points. About they say of 1,200 points. Okay, that's a extremely sharp fall within like 3 days. It has to like 1, 2, 3, 4, 5, 6, 7, about 7, 8 days, and here like around 15 days, around 20 days of work in like 3 days. It's gone. So okay, then the pace couldn't go below this as well, right? So then what happened? The pace tried to push back. So it kept making lower highs and higher lows. Okay, sorry, higher highs and higher lows. Okay, so the price went up, couldn't come back this level, went up, couldn't break this level, went up, couldn't break this level, and finally it broke. It broke, and also and the sudden and there's a successive fall. It broke this level, so we can actually remove these because like this level is now breached. So this becomes our new level, right? And this happen, and now this level is also breached. So technically we can remove all this. Okay. This server is also breached. It went up to here. Okay. And see, 1, 2, 3, 4, 5, 6. Then it went up here. 7, 8, 9, 10, 11, 12, 13. Actually, it was trying around this area for 13 days to break this level, but it couldn't. Actually, this made the lowest level, to be precise, this level, and none other point touched this level. Okay, that's here the bias. Actually, we can go bit more precise if you want. This is all in daily time frame. Okay, because daily is much the strongest time frame. Anything more is untradable actually because it will take a few weeks, few months to form. So I don't recommend anything about that. Okay, so this was the lowest form. It went up, then it actually broke this low, right? So this is our new low, right? It went up, but it couldn't break the low. It went up, but it broke the high. Okay, so here can you see low, high, higher low, higher high, higher low, and like okay, um, remove this ball. Like let's assume this ball is not formed. Okay, even here you can clearly see it's trying to push up because it don't want to go any below than this, any below than 4086. So it's trying to push up, right? Okay, so this is the rough idea on the daily time frame. So you now understand what the price is doing on daily time frame. It doesn't want to go down on like 31st of July something. So we go to 4 hour and let's see for what's 4 hours has to say 31st of July. Okay, so let's say this is a level where there's a strong bullishness. So whenever the price comes here, they try to push up, push up, push up, and this is a strong sellers, and they try to do the opposite, push down, push down. Okay, so but if you see, it went up, push down, went up, push down, went up, push down. Yes, right. But you have to see a pattern here. Okay, the pattern is actually this level came down, it went up, and it broke the high. If you take this and if you mark with the line, it broke the high. This area is the high broken. It came down, but it couldn't break the low. Like this is the lowest point. The price could move, but it couldn't break the low. Okay, cool, fine, fair enough. But actually, above this price, above this zone, the price would reverse because it did here, it did here, it did here, here. Everywhere it did. But why to take buys here, not like here? Why not buys here? Why not buys here? Why not buys here? Technically, you can take buys here as well. You can target for this high. It's done. But main buys. Okay. Because uh, when the price comes to this zone, the zone of sellers, and it kept making high, low, lower high, low, low, lower high, low, low, lower high, low, low, higher high, then low, low. Like this is breaking the structure, this one, but still it then it ended up in following the structure. Lower high, higher low. So this is breaking the structure, but it formed a low, low. Sorry, lower high. That's another confirmation. Then it broke this, so it's a downturn. Okay, same here. It's in a downturn, right? So, but here at the end, if you see high, low, lower high, lower low, it cannot be. It cannot be. Why? Because maybe, maybe if you see here, this is the low. It didn't break the low, but it formed a lower high and then broke the. So it can be like it did break the level. It didn't break the level, so it can go a lower high and then make like this. So that's a possibility, right? But if you look where it made a high, but that's a lower high. It couldn't break this level. Cool enough. Let's now mark them very closely. Okay, this is the high. It marked, but it couldn't break. It went up, then it couldn't go any further, so it come down. But this time it's not coming. The actual level is to break is 4084, but it's not coming to 4084. This time it's not even coming to 4100. It stopped here and it started reversing and break this high. So now there's a proper structure. We have a low, high, higher low, higher high on for us. And there is but there is a NFP coming on. Okay, this is not NFP. I think that's on FOMC news. Uh, NFP should be at this day. This day should be NFP. Okay. So this is the reason why we are taking buys here. So technically we can take buy like we can take buy here. Here technically it's for the safe environment we can take and target for like go. Technically I would take like wait a second. This area. over internet. This would be my trade. Okay, but this time you should understand like why we are targeting to 2027 and not take some 100 points, 1000 points something because over internet. Yes, we are targeting for 2027 because of this. We struggled for 35 days, 4 hours at this level, around 36 days, around 1 month. Not because like it struggles here for like 1 month because it tried like went up, took liquidity, came down, no. Went up, took liquidity, came down, no. Went up, took liquidity, came down, no. It's struggled here for like 1 month. So it's not going to like now higher liquidity and then come down. It's not going to happen because it couldn't wake. The bulls here are extremely strong. That's the point. Extremely they're strong. So it's going to go because this like 1 month of trying, I can be sure that this server is not going to be broken as at least as of now. So this can be hoarded forever, proper forever. This is going to be our trade. Okay. So but still, we don't want to sit simply, right? Like there are like a lot of things. Okay. See here. Uh, let's say this one. This would be like a good example. Now I'm trying to nitpick an example so I can explain this. Okay, let's say this made a high. It was a previous high, made a low, made a high, then made a low. Now we are expecting high, but it couldn't break the high, but it make a new low, right? New low. If we mark the levels, you can see this is the high. It didn't break. There's a gap. If we mark the low, it actually broke. Then why not exit the trade? Because the trade FM is still bullish. The day doesn't even bother because I started this trade from the day because the day is changing. Day is staggered by 36 days and it's now changing. So based on day until day shows like it's a change of structure, a market structure shift we can hold. Okay, that would be like if it breaks here, if it breaks here, we can look for technical source. Okay, till then we can hold. Also, sorry. So, where is it? Uh, Whenever we get a chance, see, it broke the low. Like for easiness, I am like moving this here. Okay, this broke the low. So we are expecting a downturn in force, but it didn't make. It finally broke the high. This is the right place for you to take another trade. Another trade. But I am sure that this level will not be broken. Okay, but this can be broken. See, if I kept the stop loss at this low, the next is my stop loss. That's it, clean stop loss. Okay, so here there is like no stop loss, no stop loss trade. Okay, or the stop loss would be the same as this. Okay, so wherever we get chance, this would be a chance. See, I'm selecting the trades based on 4 hours. I would select on based on 1 hour 15 minutes. Okay, so these are chances. and this is a chance. But you can ask why longer stop loss? See, this is like around 5,000 pips. What a madness! But the actual reason is I'm so certain that it's not going to touch my stop loss. It's not going to do. And this is in profit. At this point, these are in profit. When I am getting 5,000 pips stop loss, 1, 2, 3 trades are in profit. And this is going to be like my down. Also, now the price doesn't want to close any below than this, right? So technically, I can move the stop loss to break even. Okay, so we can move the stop loss to this point. Okay, so this, and this. So it looks like, wait. So now my trades will look like it's all buys. Okay, and the target is actually you can buy here as well. This trade would also be break even because the stop loss is only the stop is only here. It's a break even. Can you see? I am stacking. So if you want to visualize this nicely, it's very rough. It's going to be going to be buy here, um, buy here, buy here. Actually, I'm not seeing those. I'm just marking. So yeah, there's like multiple buys. So if the pace comes after here, if it comes like this, 1 2 3 4 trades are going to be down, but this trade is still in profit, and I'm not hedging anything because everything is in buys. This is not sell, this is not buy. Okay, so once the pace moves back, this becomes a strong level below which the pace won't come. So my stop loss will move here, the break even, and ISO checking taking my stoppers, and all the stoppers will come here. And after the price makes, say, we can move the stoppers here. So now if there were 4 5 trades, and now the 4 trades are in profit. So even if the price comes down, it's only one trade that is in minus. That the other 4 trades will take this. So you don't have to do anything. You just sit and enjoy the profits. That's how you trade. Okay. And also you can take one more trade in 4 hours. In 4 hours here. If you see here, this one actually technically you can take trade from here to here, like from 381 to 378. That's like 40 pips. It's not worth it because stop loss would be more, so I don't take it. And here made a high, low, tried to break but it couldn't. It failed to break and low. This is a second of downtrend, but bro, you said uptrend. Yes, so so uptrend in a downtrend for which you can use. So you can technically take short here Uh, I will keep assert. Okay, pretty bad assert. No options there. Okay. And yet this at 1.17, not bad, right? Also, here, this is a good opportunity. High, low, but low, high, low, low. So this is another opportunity for you to sort. You would like to, you would possibly sort here, right? Yes, sir. Yes, sir. Can be technical, can be. Okay. Yes, sir. Can be at the boss eye as well. It is extremely safe to hear, but boss eye as well. It's fine because the pace couldn't sustain. So you can keep it like this until the pace moves. Give the market success shift. Hold till MSS, or if day becomes BIS, use buys and close buys and continue sells. That's it. So my trades are like, it's an example. It's a very bad example, but I just want to show what's happening. Let's say I took the trade here like this. Okay, this is the I I'm not taking the raise, the extra add-ons from here. That's called a raise. I'm not taking just the main trades. Okay, so these are the trades, and if the pace book, this is the level of level because this is where the last pace sustain the BS pressure. So if the pace broke here, say, okay, here I'm not losing anything because when the pace comes down, this buys my profit will reduce, but this says my profit will increase. So this technical hedging, now I make zero profit or zero loss. Whatever I have, it's there, but I can't lose more, I can't lose less. Okay. So for example, if my buy is equal to plus 1000, sells is plus 200. If price falls by 100 points, buys equal to plus 900, sells equal to plus 300. Hedging. I won't lose my profits. Okay, I'm not losing my profits. But if the pace comes, if the pace comes and say reverses, reverses, I will end my sell here. So this is my profit. Like this sell area is my profit. Also, the price is going up, so my buy will lead me more profits. Okay, but if the price falls down, I will close buys and I will continue sells forever. That's it. This is the same concept here as well. Sorry, when you take sales here, you are technically supposed to continue forever. We don't know. We don't know this 4 hours. If it becomes like instead of going up, if it becomes like this, your day will become also PIs. Your daily time frame will become market success shift. Those things will happen. So when there is a market success shift here, at this point there was a shift. So I would have exited the trade, and this would be my profit. 334 pips, not bad. And also this lost pips from 390 to 407. I will get in my buys because I'm holding buys from here. This buys, I will gain back in this buys, so I'm not losing anything. So this is technically this is how people trade. This is how banks trade. Okay, technically banks don't trade like this. Banks do the uh, like high frequency trading. They scalp like 1,000 times in this. That's how. But the longer trades, this is how they go. This is why they have AMD, the power of those things. This is how they do it.